Now, a lot of persons trade the forex or futures market not knowing what is liquidity. Now, stay with me in this video and I'll be explaining to you what is liquidity and how you can easily spot liquidity in the market. Because if you don't know how to spot liquidity, you become the liquidity for the smart money. Okay? How to spot liquidity in the market. First of all, if you do not know what is liquidity, chances are you may not even know how to spot them in the market, even if you see it. So, what is liquidity? Liquidity simply refers to orders or money in the market. And this money or orders are in the form of your buy limit, your sell limit, your stop loss, or even your take profit. As someone who trades in the forex or futures market, if you do not know how to spot liquidity in the market, you will become the liquidity for the smart money, because you will end up entering trades when the smart money are exiting their positions, okay, or exiting trades when they are just entering into their positions. So how can we find this liquidity in the market? Okay, how can we spot them? No, you go through your chart. When you open your trading view, you see all the charts that is on based on different currency pair that you are trading, or if you're into futures based on your assets that you are trading. Okay, so how can you spot that liquidity? Where can liquidity be found? Now let's dive into that. If you're watching for the first time, kindly subscribe, turn on your bell notification so you will be the first to be notified whenever I upload a new video. So liquidity can be found in the following areas. One, we have equal highs and equal low, like in a rangy or consolidation market, your double top, double bottom, triple top, triple bottom. Okay, now this is a consolidation or a rangy market where you have, each time price gets to this particular resistance level, okay, it will bounce back. Okay, each time price touches this particular resistance level, it gets back like that. Now these are liquidity areas. Okay, these are liquidity areas. This is resistance area, support. So each time price gets to the resistance area, it will bounce off down to the support and again to the resistance. Now these are all liquidity area because there are so many activities going on at this particular section over here. Okay, so this for the double top, triple top. Okay, now these are all liquidity areas because there are a lot of traders waiting to short the markets at this particular resistance level. So whenever price gets to this resistance level, okay, people sell it down. When they try to get up again, traders that are still active with their orders will also sell it down. Okay, same thing with this triple top. Now we also have double bottom, okay, and we also have triple bottom. So each time prices gets into these levels, okay, there are some orders which are not yet filled. Now they will also buy it up. Okay, so these are all liquidity areas. Okay, so next we have swing high and swing low. Now these are also liquidity areas on the charts. Okay, these are also liquidity areas because they are on mitigated demand zone. Okay, so each time price gets to this level, buyers take the price up. Okay, now these are all liquidity areas on the chart. Okay, so next we have trend line liquidity. So anytime price gets to this particular level, okay, it tends to bounce off to the upside. Okay, when it gets to this resistance trend line level, it bounces back like that. Okay, so these are all liquidity areas. These are all liquidity areas, okay, where price tend to respect each time it gets to. These are all liquidity areas. Next we have previous high time frame levels. Okay, Now this can be broken into previous day high or low, weekly high or low, monthly high or low, section high or low, like the London section, the New York section, and all that stuff. Now each of these levels, these are all liquidity zones. For instance, when price get to this particular level, it tends to respect it. Okay, like we have like we equally have the psychological level or round numbers. Now whenever price gets to that particular level, it tends to respect it either by retracing back or bouncing off. For instance, now gold is trading in its all-time high, which is 4,600 plus. Now it has never gotten to that level. Now there are tendencies that when price gets to that 4,006 plus thereabout, it tends to reverse back. Okay, now these are all psychological level. For instance, when Bitcoin will be on a particular price level for a long time and will be unable to break that particular level up to go uptrend, these are psychological level, because once it gets to that level, it tends to reverse back. Okay, now lastly, we have the fair value gap / imbalance. Now these are all areas on the chart where we can find liquidity. Now if you see a chart like this, okay, there are liquidity resting at these zones. Okay, there are liquidity at this resistance level, at this support level, because a lot of activities, a lot of traders are lining up to either buy or sell the market. Basically, these are some of the ways you can spot liquidity on the charts. Okay, and I hope this video has been of help to you. Kindly subscribe, like, and share this video. Now till I come your way again, remain blessed.